There we go. Recorder is running. Good morning, everybody. Welcome to the Hit Run Candles Trading Room. If you're new here, appreciate you being here. All right. Today is April 22, 2024. It is Monday, and we're big week of earnings this week, next week. Watch that. That's going to be could be interesting. Could be interesting. Not only if you're trading something through earnings that you don't realize you're trading through earnings, it could be a big surprise to you. Also, I would say the market's not exactly in best shape for the bull at the moment, not the best, and we'll talk about that. So let's look at the SPY here. Last week, we successfully made it down. Here we go. Successfully made it down to the 50% retracement line. And it looks like this morning we're trying to bounce up. As we moved back to that 50% retracement line, and the 50% I'm taking from this, whatever this is, January, over here to the left, to the top right in there, and that gives us our 50% move. So that put us in a good oversold position. Oversold doesn't mean that it's time to be long. That's not what oversold means. But we are in that oversold position nevertheless. And it could go lower and we could get more oversold. So like I said, just because we're oversold doesn't mean it's buying time. Watch the candlesticks here. Watch the price action. We could be setting up for a little bit of a relief rally. Now, I want to emphasize the word relief and not rally. Sometimes when we hear things, you know, we're human, okay? We're all the same. We hear what we want to hear. So when I say relief rally, some people are going to hear the word rally. Oh my God, let's get long and go crazy. And let's pump the brakes a little bit. Relief is what we should be hearing, which means it might be mediocre at best. And a relief rally means that there is a top somewhere. Is what that means. It's just a relief. It's a pressure valve, letting that pressure off a little bit. So we are still in a bear market. You can see that. Just simply draw a line. You know what? I have to do it this way, I guess. Draw a line there right now. This is what I would use. That high, just come down, touch those lows, and there's your downtrend line. All the bullishness in the world right here means nothing. I mean, we can make money on it, don't get me wrong. But it absolutely means nothing for moving higher until we break out of that area right there. A combination of that red line, angled line, a combination of that red box and the 50-period moving average. That red box, by the way, is the 50% retracement of this top, any one of those tops here, and the recent low. So we're going to have to get through that. The way I look at that is anything above the 50% retracement belongs to the bulls. Anything below the 50% retracement belongs to the sellers. Doesn't mean the bulls can't run some seller territory here. They can't. But it's when they get to that line up there, that's when the bears just might get a little bit testy, a little bit angry, and come back and bite the bull a little bit. So any kind of relief rally, we want to be careful there a little bit. Okay, so so there's the SPY. One thing that I think we need to get through is the T line right here. That's the black line. That's, to me, very, very important. I've used that for a lot of years as a guideline. Anything below the guideline is not necessarily worthy of a bullish trade. Not necessarily. Sometimes it can be. Above the T line is more likely to be worthy of a bullish trade. So below, we're still looking at the bearish side of things. If we're going to have a relief rally, a lot of charts are going to start moving up, and then we can start looking for that bearish, that rollover as it starts to come in there. So we pop up, we can start looking for that rollover here until it breaks through. And once it breaks through, then the bulls have a fighting chance to get somewhere. Right now, I would think we don't even have a relief rally in sight until we cross 499.35, basically the body of this candle. If somebody wanted to use the high, that would be fine. That's just, I think, personal preference right in there. 500. Anyway, so say above 500, above yet Friday's candle, we're going to, anything below that, no relief rally. We're just going to putz around here and then slide down even further. So we're going to have to take that out. The T2123 will be very important. I believe in this wholeheartedly. This is like an absolute. I truly believe this, that trading is much easier to the long side if the 15-minute is bullish and the 60-minute is bullish. Right now, neither one is bullish. So it's still telling us to the bearish side. So as I look at the charts being oversold, then it gives a little bit of that kind of in the middle. You know, what are we going to do? We're really oversold, but yet we're still reading bearish. So it's a stock picker's market is what it amounts to. I wanted to take a look at, let's see, what was it? Well, we'll look at the diamonds real quick. Here's the diamonds. And you see the diamonds, they're trying to move up a little bit. But until they make that low, where's my pencil at? Where'd it go? There it is. Until they make the low, which they have, rise higher and make a high wherever it may be. It could be right there. And then we pull back for a test and then break out of that high. We just don't have anything. It's just not worthy of a bullish market. We need that to start. And that's just basic trading 101. Anything beyond that is really just kind of guessing you have a bottom. I mean, there's no technical reason whatsoever to think that we're going to rally up until that chart pattern is formed. And this is something that I think all successful traders have accepted in the market. Non-successful traders need to accept this. And the sooner you do, the better your trading will be. Pretty simple, because there's certain standards in the market that must be met. And that's one of them. Right now, based on the chart that I see right here, above 380, 350, or you've got no bullish activity for me, zero. All we're doing right now is setting up for a bearish move. Now, if we break out of that 380, 350, the trend indicator there, that this candle right in here, if we do that, that could set us up for that bullish activity. Up, we'll get some sort of a rest, whether it be sideways or down, and then we could look for that next move up. The next problem is going to be the 50-period moving average. Right in that area, okay, don't marry the exact price. Right in that area is going to be the next problem. Now, if you follow the charts at all, you've probably seen in the past something like that. We rally up to the 50-period moving average and fail. Now you can draw that downtrend line, and we don't want to get caught in that right there, okay? We just don't want to do it. Here's another thing. Take the Qs as an example. Qs are still moving down. The Qs went right through our 50% line here, almost to the dotted deuce down here. Here they're trying to move up pre-market. They're going to have to get past, 4 1/4. Yeah, we'll call it, 424 before we could even call this anything near a decent rally. We could put in a candle that looks like this right here. You could do something like that. And unless you break out of that line, that candle means absolutely nothing. Candlesticks require confirmation, and that's what we're going to need to see. The next headache is going to be right through here, and this is the 50% retracement of this low and these highs up here. Once we do that, you're going to have to get through the 50-period moving average. Coming out of a bearish move is not a simple snap of the fingers. It's not just a single candlestick. It requires that pattern and the setup, okay? Now, all right, let's take a look at, what was I going to look at? I wrote a couple down here. Let's take a look at coin. Coin is still setting up short. Nice blue ice failure right here. Here we've got a nice top. Here we rally to the 50. We kind of walk that 50 a little bit. We're below the 50 period moving average, so we've got that blue ice failure setting up. Price below the 50. The T-line's about to crash through. We start moving up, say back above 236. That would probably make me rethink that short, but right now this is looking to the short side. PHM is another one. PHM. Here we're popping up. Let this pop up a little bit. This just might roll over. And that's what I'm looking for, waiting for that sign, that rollover. And remember, for all members, we'll alert. An alert goes out on the app. For those that are new here at trial, if you don't have the app, make sure you get that. It's yours. It's not. As a member, you get it. So we'll send something out on that app for you. So what I would really like to see here is a little bit of a relief rally. Rally up, come up here, see where all that resistance starts in that area, pull down, and then we can set up for those shorts again. Another one was JNPR. That's another one setting up. Blue ice failure here just looks like it's about to give up. Big old gap in here to fill. Even if you got half that, you're looking at almost 10%. So that might be a nice trade right there. For a couple longs, because there will be long charts that work out. American Express. I think American Express is doing a pretty good job. Target I have is 240.50 and then about 250 up here. Let's get to that 240.50 first. Be careful not to chase. This is important. Don't chase. I have HRL written down. Harmel may be trying to set up here. First target, 35.50, then 36. We'll worry about them higher later. But right now, this is setting up. So yeah, we moved up, and now we've got that inside day to day. We're over the 200 period moving average. We might want to jump up and attack that 35.50 area. Let's look at NVIDIA. All right, so let's take a look at NVIDIA. NVIDIA is still weak to me and still short. This is that 50% area. To me, there's nothing bullish about this until it starts moving above that area. We could draw that trend line in here like that. And you can see how it might take a couple of days. Boom, 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 boom. It could come through there. It could. Here's one of the things to keep an eye on with NVIDIA is NVDS. If you're looking to short NVIDIA, you don't want to pay that big price. Here's the inverse ETF for NVIDIA. So I look at this inverse ETF on NVIDIA, $76 here. That is a very bullish setup, in my opinion. And until that fails, NVIDIA itself would be hard to trade long. So this might be one to watch. And if it starts to fail and you feel like you want to trade NVIDIA, then NVIDIA might be getting ready to do something. But as long as this stays in that bullish territory, it would be very hard to be long NVIDIA. The reason I bring that up is I had an email this weekend asking me, is it time to buy NVIDIA? No, not till NVIDIA gives a buy signal. And you certainly want this NVDS not to be flashing bullish. And right now, it is still flashing bullish. Take the Qs. So, same with the Qs. We rally up. We might get that rally up into some resistant territory. But take a look at SQQQ. Now, while I do think this is a little high to be buying, watch for that pullback, because if the Qs start to drop, this is a good one to trade to the long side. And what you're doing is shorting the Qs. It's priced right. This is one of those ETFs, inverse ETFs. But right now, I do think this needs to pull back a little bit. Also, my next target on this is going to be the dotted deuce, just based on moving averages around this 1360 area. So watching this for a pullback and for an entry. Alrighty, that's about my time this morning here. I want to thank everybody for being here. I'll be back in about 30 minutes when the market opens up, and let's see what we can do with this market, make a little money today, okay? Thanks, everyone. Appreciate it. Take care.